Well, Igor, that's because I wasn't talking. All right, good afternoon, everybody. This is Blake Morrow, and you are listening to the Daily Roundup webinar. I'm going to give you a quick overview of the FX market, just like a quick 5-8 minute update on what's happening. I was just reading that little Bloomberg piece that hit my inbox regarding Euro optimism. We have ECB President Lagarde. She's going to be speaking in about 30 minutes. So keep your eyes out for that. The ECB minutes came out and they were pretty hawkish, but they are the minutes. It's not necessarily anything but the minutes. Until we start to see some real shifts from the ECB President Lagarde, and we see like a shift in either tone, rhetoric, during an ECB meeting, or obviously a possible shift in their in what their purchases are, or to really shift in expectations on rates. The euro rallies like we saw just over the in the early European or late European hours, they're just not going to last. But you can see the euro actually traded down to 161% extension. And close to an uptrend line in the euro. I actually picked it up at 111.30, so I already bought it. And if you're in the ForexAnalytix chat room, you knew that I picked it up over here because of two reasons. First of all, well, actually, I can give you a multitude of reasons, but first of all, we have this uptrend line that comes in 161% extension. I know Lagarde's speaking in 30 minutes, and I knew that about an hour ago, or 45 minutes ago, or whenever it was. But I bought it down here because if we do get a bounce, like let's say back into the 40s or maybe into the high 30s, if Christine Lagarde said something that might be interpreted as more hawkish, I might actually have gotten the price of the day for the euro. The flip side to that is, maybe she doesn't, it just slumps and, takes out my stop, which is just below this trend line. But I wanted to put myself in a position to take advantage of it. And that, this is not really an overview of the FX market. This is more from a trading perspective and kind of a strategy. If I know that something is happening in the future, I'm going to try to position myself in the market ahead of that event, so it's tilted in my favor. So for example, I actually think that this year you're going to see the ECB take more of a hawkish stance. I believe what I was just reading on Bloomberg confirmed what I was thinking about that. But it's not, they're not bullish or hawkish until the actual ECB event happens, and market expectations tilt that way. However, that means that I predominantly want to play the euro on the long side, like I did this morning. I bought the euro earlier and then I sold it on the spike up. It's fine. I bought it here. You can make money either way. If you could have shorted at the highs and covered it down here, it's fine. I just happen to be more of a long side bias, so that's what I'm doing. And so picking it up here, and just in the event that she says something else that's maybe viewed as more hawkish, I wanted to be in a position where I had a 10-15 pip profit, because if she does say something hawkish and it rips up another 15, 20, 30 pips, maybe even up to highs, now I have a really, really sweet position. And if I get stopped out, it was minimal risk or manageable risk. So anyway, that's again, that's not really an update on the market. That's just kind of an update on how I do things. So I got a comment from Peter about the move in the cable. Well, guess what? The cable is actually in breakout territory. We're no matter how you want to draw your triangle trend line here, we are above and in breakout territory. If you guys are, ForexAnalytix subscribers, you know that, Andre and myself have been bullish on the cable for the last several days. It is breaking higher. Can this continue? It might, but we have to see a continued dollar move. And what we are seeing is, the dollar is stronger against the yen. The dollar is stronger against the Aussie right now. The dollar is stronger against the euro as well. So in order for the cable to continue on above 131 and closer to 132, which, you know, I think that is very doable, we are going to have to see some more broader based dollar weakness. And, you know, with the data today, it's hard for me to imagine that the pound is going to expand on these gains going into, you know, the Asian session. What I think is quite possible is the cable continues to hold its bid, something like this, and then dips down here towards, like, you know, 130.50 or 130.40 are probably, you know, going to hold. And if they can hold like that going into tomorrow, I'm going to be pretty bullish the cable. That's, you know, personal point of view. Now, I wanted to cover the yen because I did tweet about it earlier. Look, the dollar yen is pushing this multi-year trend line. It is. And, you know, a reason why I tweeted what I tweeted is because I think a lot of people are looking at this. They're looking at this saying, oh, look, it broke out. I'm actually just taking a longer term point of view. And I think the longer term point of view is valid until it has broken. So, you know, if you take the highs that were from back in 2015, you know, the highs that were back in 2018, 2019, and then to where we're currently at, it comes in right about where we're at currently. Does that mean I want to short the US dollar Japanese yen here? No, not necessarily. And matter of fact, I have actually played it on the short side today, and I'm not sure how I flatted it, but I did. I ended up getting out and not losing any money, which is great. But this 127% extension of this is the Iranian move. You know, after we assassinated the Iranian general, and then there was the subsequent attacks, you know, the rockets firing and everything else. We're at 127% extension. It comes in around 110.25. I really think that the dollar yen needs to get above 110.30 in order for it to be bullish. My big hesitation, though, is the S&P that's climbing right up into this 161% extension confluence. And I did tweet about this as well. I think this is going to be a big resistance for the S&P. You know, whether it just ends up being another, you know, speed bump, or whether it's a formidable resistance that can be traded off of in the coming days, we'll soon find out. But we're almost there, and I do think that we're going to at least pause, if not, you know, get a little bit of a pullback, if not, you know, make an intermediate top up at these levels. So there's no reason to say, oh, the top is in, you know, even if we test it and we reject it. What really would signal that to me is a break below, you know, 3,200, and really a break below 3,160. And then we'd know that the near term top is in. But for right now, it just looks like this is going to be some resistance that we have to be cognizant of. We have to be aware of. To blindly be buying stocks in face of all of this resistance, you either are not paying attention, or B, you think we're going to go blow right through there, and your risk outweighs the reward, which, you know, if you think about it, you know, if you just say your risk is, you know, your risk is here below this trend line, which is at 32.10, and your you know, your possible gain is only, you know, 10 or 15 points, then, you know, I think you have a skewed risk reward. I think if we break out and we get a solid breakout above that, then we can continue to accelerate higher, possibly to like 3,500. But what I would do, if I was really just adamant about playing the long side, I'd wait for a breakout, let it come back and test, and then on that test is when you buy it, versus, you know, trying to chase it up here right into pretty key resistance. What I feel is key resistance, knowing the dollar yen is also struggling at this 110.20 level as well. You guys also do not disregard the Australian dollar weakness today. Big rejection. If you were listening yesterday, 24 hours ago, to this specific webinar, 24 hours ago, you might have recalled I was looking at this chart and we were here. Well, let's go 24 hours ago. That would be right about exactly right here. So we were right here, and I said, and I didn't go back and listen. I'm just, memorization from 24 hours ago. I was sitting there going, oh, look, there's a 38% retracement right here. What I'd love to see is I'd love to see a breakout above the 38% retracement, come back up here, hit these highs, and this resistance is a big resistance. You can see it from all the way back here, all the way back, huge, right? Huge pivot. It comes in at 69.30. You look for a move up to there and maybe post a false breakout and a reversal lower. We got that. False breakout, reversal lower. Then your next question to me is, hey, Blake, how did you play it? My answer is the same. I'm going to give you the same answer that I gave you yesterday. I'm not too hip on buying the dollar, so instead I'm going to play a cross rate like the Euro Aussie. So what did I do today? I played the Euro Aussie to the long side. I played it to the long side, and I was long like right down here, and I got out of it right around pretty close to where we're at right now. And that's how I played it. Even though I was bearish the Aussie dollar, I didn't have to play it against the Aussie, or against the dollar. I played it on a cross rate. So anyway, just a real quick update again on some of those majors. Remember, guys and gals, if you are not a ForexAnalytix subscriber and you want to be with me in the chat room so you can hear all this and what I'm doing throughout the course of the day, make sure you join, because these prices are only here till January 24th. And after that, you won't see them for another year, or actually like August, September but if you want to wait, another 8 months of your life, you can. But this is the time to take advantage. All right, guys and gals, I will see you tomorrow. Or no, wait, I will not see you tomorrow. I'll see you tomorrow on the FACE webinar. We do not have the daily roundup on Fridays. So you guys have a great afternoon. Thanks for tuning in.